on, you guys? It's your boy Jerry Trades back with another brand new video. Hope all you guys are having a great day. It's great to have all you guys here. So I obviously owe a lot of you guys trading recaps. I haven't been keeping up with them. I've been just completely busy. After I'm done with the market, I'm immediately booked those calls and I have my schedule filled. So it's been a really interesting week. Great week for SoCal Trading Group in terms of bringing on new members, starting beginner classes, and connecting with a lot of you guys that really have that interest. So it's been a pleasure to really meet and connect with all of you guys, but I do want to go ahead and take care of our trading recaps. So on Monday morning, I went ahead and took one trade on CRM, which was Salesforce. It's a great company. It's in the S&P 500, but in the recent weeks, it's been taking significant hits to its share price, as I believe there's been some competition added to the market from Anthropic. Anthropic is another AI automated, I believe you can say, platform or software developers. So them adding competition to the market significantly impacts CRM shares price, but it's already been happening, meaning that there's been a constant decline in its share price since Wednesday of January 7th from 268 to a current, when I took the trade, a low of 230, right? So you're looking at around $30 in share value gone in about 1, 2, 3, 4, 5, 6, 7 days. So that's a significant amount of share value and market cap to lose. Now, going into this trade, knowing that there have been taking significant hits, even just this one day right here, if you go ahead and look at CRM 260 down to 240, it's a $20 price move. You're looking at close to maybe, at that point, 10% in a day down the drain. That's significant. That's a lot of money, man, into put options. So usually when I see the scenario, I do what we call trying to catch a falling knife. And that's exactly what this is here. Let me fix my lumbar support real quick. Get real locked in here. Alright, so when we have essentially, fix my hair. When we have this oversold scenario in a company, even just something, even from Monday, right? Last Wednesday, 267. Down to market open to 240. I'm assuming, hey, this is it. We caught the bottom of the knife. It's about to reverse. Let's go ahead and take some trades on this. So when approaching this trade, I went ahead and kept the open mind. And I was like, you know what? It spiked up yesterday right here off of 236. Dropped down in pre-market off of 240. And then going into today, I was like, all right, boom. Immediately day at market open, started from 240. Dropped to a low of around 235. Now, my initial entry, let's go ahead and clear this chart up. So, but going to begin with, I'm using yesterday's data as reference. So I can arguably say this is supply, this is support, this is our resistance, and then you can say that's our demand. We obviously fell below all those levels here. Market open falling even below yesterday's supply to establish now a new support here. Now, once I seen this new support develop, assuming that we are already below yesterday's supply point, which is right here, yesterday's supply, for those of you guys that don't know how to reference that or understand the context behind a supply zone, a supply zone is usually the lowest price that a company will go before buyers step in and buy it up. So you're usually looking at, somewhat of a 90% buy order ratio here at a supply zone, then something like, I guess you can say that 70-30 ratio, right? You have 70% of buyers, 70 B, 30% S. I use that as reference. Sellers is what we call support zone, where for the most part, it's consistent bringing price up, 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 and then it breaks below. That area when it breaks below and price comes up again, price comes up again, price comes up again, clearly that's a point of supply that we use as a reference that usually we see around 90% buyers and 10% sellers, because it's rare that after that point we usually go lower. Now, when entering this trade, I notice we're below the yesterday supply zone. So, boom, market opens, boom, breaks yesterday's support, breaks yesterday's supply. Now we're going into a new lower supply zone. So the supply zone establishes here at 235. And I'm thinking, we caught the falling knife. The trend is over. Oh, whoa. Let me fix this real quick. I'm thinking we caught the falling knife and the trend is over, right? Like we caught this bottom. It's about to ride for the rest of the week. It's about to be a great one. Well, guess what? As soon as I went ahead and entered that trade, go ahead and break this in. It looked great at first. It looked like we did a good job. Because I had caught this bottom right around here in a long position once I seen this bottom. So I got this bottom. I ended up closing like around here later on in one day, just accepting the loss. So I entered right around here, and then we got this big jump from 236, boom, green candle, spiked all the way to a high of 237. I'm going to go ahead and make another point, 237. So let's go ahead and break into this a little bit more. All right, here at 237, it's around, I want to arguably say maybe 8:45, 9 a.m. So I'm like, all right, it's still early in the trading day. We have the majority of the remaining of the trading day for this to start coming back up. Maybe this is just short-term selling pressure before the breakout. You know, we got that negative trend from market open, bearish trend, I should say more specifically. And then boom, spikes up. And I'm like, damn, I got a runner, 237, it's about to go up. Obviously, I'm expecting some sort of a little bit of a pullback because it's the first break of the trend line. So obviously, it's not going to be a one-hit reversal. I wasn't expecting that. I wasn't, but I really did expect more from this type of price move, especially so aggressively. You know, you got that one candle, 236 flat, boom, move up a whole 50 cents. From there, non-stop consistency, 236.30 to a high of 237.30. So a whole dollar move in one candle. Significant gains right there. Boom. I'm like, all right, it's short-term selling pressure. Maybe it's going to hold this support at the supply zone here. And boom, it doesn't. Now my trade went from green plus 60% in a couple of seconds, minutes really, and then it was red. And we consolidated all here at this red, boom, boom, boom. Consolidation, for those of you guys that don't know, it's just sideways movement. You notice here there is no downward trend. There is no upward trend. It breaks. And we kind of just follow this sideways movement. That's called consolidation. So now that you guys understand that term, it was just consolidating all day long. And when it spiked up here, I was only up like around 10-20%. So to me, I was like, you know what, this is a very dangerous trade, and I cut the trade right here once it broke below 235, accepted a 50% loss, and I'm glad I did, you know, sticking to my stop loss, which is very important, because this is one trade that I did stick to my rule on, but later on in the week with the more trading recaps that I post out here on my channel, you're going to see that I had a problem with this week sticking to these stop losses, and I was losing more money than I should have just because I couldn't accept that I got the trade wrong, and overall my ego was defeating me. This is one of the ones where I really dodged a bullet. Missed out this whole price drop on 235 to 231, dodged that bullet, and well, you know, took the first loss of the week there on CRM. On Thursday, the trade right after that, $1,600 in an hour. And yeah, bro, it was just news to Anthropic entering the same like automated agent AI workforce. I guess you can kind of put it in that perspective. And yeah, they entered the marketplace and they found extreme competition, and investors are just looking for any reason to, you know, devalue a company, more so feel that, I guess, overreact on competition, right? Because competition in any market share is going to be present. It's what happens. You know, Coca-Cola, you have, and soda, I mean, you have Coca-Cola, you have Sprite, you have Fanta, you have Dr. Pepper, you have root beer. There's multiple different, you know, in the same industry. So I guess in the market today, in this week, we had that announcement of, you know, a Coca-Cola dominated market. Sprite steps in, and investors overreacted, oversold this company significantly in just a short amount of time. You know, in terms of future perspective, what do I think on the outlook of the company? I think it's a great company, especially if it's in the S&P 500. I believe there's potential, and there's a reason that it's in there. We noticed that on Wednesday, January 21st, We did find this lower point of supply now at 218. So it looks like this company did get a really good, I guess you can say, humbling repricing. That repricing putting them down to now resistance at 231. Looks like you built up some support today or Friday market close at 227. So, do I think that this company has the potential to start making that reversal? I believe that it already started. Now, it looks like we have this clear point of resistance here to break past through on Monday. But if we can't start breaking past around that 230, I do believe that this company has the potential to start reversing around these previous levels. You got to keep in mind this was just 7 trading days. It's not a couple months. We can easily see this company back around these 230, 235 levels, looking for call options going into the, maybe the near short term, as it already kind of established this lower bottom, as it hasn't seen prices this low since April of 2025 when we had that big red month. Let's see. Big red month back in even May. May was the second time we've seen prices that low, and that was over there at 213, but it'd be shocking to go down that low. But even, these prices here from May, looks like she caught that and immediately bounced up. But in the nearest term, April 228, you have August 228, and you have it happen again in November 226, around a low 221. We found that similar support here around 217. So I guess it's a little bit lower than 221, but still very significant, right? I think we could have caught the bottom here on CRM, assuming this company does hold these levels. And man, even going maybe on some long-term positions, right? You got to remember, when you're buying call options, you're buying ownership of 100 shares. You're not buying the short-term investment or asset that you have to be looking at such a, I guess, short-term risk, right? At the end of the day, you have to understand the true concept and definition of a contract and what it is you're purchasing. You're purchasing contracts that give you leverage of 100 shares until given expiration date. So if you've caught the bottom of a company and you have the ability to purchase contracts out, until maybe February 14th, February 21st, guess what? You now created a kind of a form of passive income for yourself because your shares are going to be working for you, maybe achieving a price around 250, 248 from a low 227. You let it ride for the next 3 weeks, maybe a month, 2 months. Guess what? That's going to be working for you as if you made the investment of a full 100 shares. And that's assuming you only get one contract. You can get multiple contracts. Now you have 400 shares. So something to think about, man, going into the future. I do think there's a great opportunity in CRM as it was previously trading here at 360 just not that long ago, beginning of last January. So on the 1-year chart, taking significant hits, but I think this company has a lot more potential than, where it's currently at. It looks like we have this near-term resistance at 260. We're still about, currently trading at, if this is correct, let's go ahead and zoom in on this. Currently trading at 227, so around $33 away from its, previous point of resistance. It's high right here, 262. There's a lot of room for this company to make the reversal, starting already from a low to 219, 220. You can see this potential here in the near short term. I think it's a great opportunity to take some call options going into next month, probably 2 months from now in March. You can start seeing a really significant price change in this company here, CRM. And yeah, that concludes this trade recap. I hope you guys enjoyed this video. It was a pleasure, being able to publish these videos and share them with you guys. I hope you guys understand them and they are helpful and a useful tool for all of you guys to hopefully find some success in your trading journey. I hope you guys enjoy it. Jerry Trades with SoCal Trading Group. Over and out, boys.